Bruce said, help me understand the value, the importance, the relevance of a blow-off move, right? Well, thank you. That multicolored awesomeness, Scott. You were there, weren't you? So the stock starts going down, right? You start having this nice sell-off. And I'll tell you guys, I mean, God, the amount of money that I've lost on this is over the years is just stunning. Because what would happen, let's use candlesticks. I'd get in, right, and I'd see, you know, like a Bollinger Band breakdown, and I'd be like, whoa, this is awesome, right? I mean, just phenomenal. And I'd get in, and then the stock would go lower. And I would just be ecstatic. And then the stock would go even lower, and I'm like, oh, I am killing it, right? And I would notice that as the stock went lower and lower, the volume was getting higher and higher, right? And so this one would go like this, all the way down here, and I'd be like, oh my God, I'm making so much money, and the volume is just crushing it. I'm killing this trade. And then, you know, the next minute it would do this, and the next minute it would do this, and then the fourth minute it would be a doji, right? And then it would turn into something like this, and it would be bullish. And there'd be this wick down here that used to be all of my profit, right? That used to be all my profit down there. But now it wasn't. All right, anybody ever seen something like this? You get in, you get all excited, and then you end up with a candlestick that looks like this, and you just, I mean, it just piss you off. I mean, it's frustrating. Like, man, I had a bunch of profit. Well, if you look at the volume bars, right, what ends up happening is that you have volume. You have volume, you know, you're selling off, and you're like, okay, well, it's a good sell-off. Then the volume gets up a little bit higher, right? And then the volume just mammoth, right? Well, you're thinking that this is a good thing. Brian says, not me, but I know a guy. Okay, good. Me too. I probably know that guy too. So you're thinking, you know, okay, well, this is a good thing, and then all of a sudden it turns around and it almost becomes almost too much of a good thing. Well, here's what's happening when that happens. And I saw this happen, and the first time I saw this happen, I was telling the folks in where were we? Was it Tampa? I think it was in Tampa. I was telling folks there. It was a very thinly traded stock, and the guys I was watching, and they were going in and they were shorting little pieces of the stock, right? Just a little, just a little, just a little, right? And what started happening is this stock started going lower. And I really wasn't following what was going on, but these guys had so let's just pick, you know, some random numbers here. Let's just say that this is, you know, $2, or it could be 200, doesn't really matter, right? And then this price down here was, you know, 190, right? Right around in here. And then this price down here was like 150, and then down here was like $1, right? So what these guys were doing, and it was fascinating to watch, they're coming in and they were shorting the stock, right? Which caused the stock to go lower. And then, you know, somebody else would come in and they'd either sell their shares or they'd short some, and the stock would go lower. And these guys are all waiting. Well, what are they doing at the same time? They're going in on the other side of the order book, and they're putting in an order to buy, right, at $1, and it was, you know, 50,000 shares. So now there's this order down here, right, and the stock price starts going down, right, and everybody who was shorting the stock didn't know what was going on, wasn't paying attention. They're all excited, right? Because the stock's doing this, it's doing this, it's doing this, it's doing this, it's doing this, and the volume's going up, and then all of a sudden it hits this buy order right here. Well, what's going to happen when it hits the buy order? What's going to happen to the stock when it hits an order of 50,000 shares to buy it? Yeah, it starts to go back up, right? And more people are saying, oh, wait, somebody just bought 50,000 shares. Oh, crap, I'm going to buy 10,000. Now it's 60,000. Somebody else down the street's like, well, screw them. I'm going to buy 50,000 of my own. This thing rockets higher, and what you end up with is this massive amount of volume with a long wick that goes right to where that order was embedded, right here, right? Big volume because you had buy orders and sell orders that were filled in that same candlestick. When that happens, that much volume, that much buying pressure coming in, oftentimes is enough to reverse the stock, take it higher. Well, all these guys who were buying the stock at $1, no sooner had they put in the order to buy it at $1, they had an order in to sell it at $1.50. So Bruce, does that help understand kind of the mechanics, if you will, of that blow-off bottom? It happens going up as well, blow-off top pattern. Does that help understand? So when we are trading and we see a candlestick that has unusually high volume, and by unusually high, what I'm looking for is this right here. Okay, had this been a long wick at the bottom of this bearish candlestick, I'd have been all about this. Might still. This candlestick right here, big bearish candlestick, big volume, and in this case, this was more than a third higher volume than we picked up in the first opening candlestick. So when that happens, it tells me, wait a minute, something unusual is happening. I've got to do something. I got to pay attention to this, right? The volume that is higher than your opening volume that occurs at any time during the day, guys, should get your attention. Something's going on there. There's buying interest, selling interest, or both. In the case of a blow-off candlestick, Bruce says, what's our preferred response? If I see a true blow-off candlestick, Bruce, I'll tell you, let's use this one as an example, and I'll just show you where I would have been just finicky as a cat on a hot tin roof on this trade. Let's use Baidu as an example. Okay, so Bruce, our preferred course of action is either exit the trade that you're in or look for a new trade going the other direction. All right, so you get a breakdown, you buy some put options, retraces a little bit, and then it starts going down. Everybody with me? All right, starts going down, continues to push below the lower Bollinger Band. I'm good. I've got decreasing volume, nothing to be concerned about. I've got basically average normal trading activity going on here. Okay, little one retracement there up to the 10 moving average. I might need to stop out. Nope, I think I'm still good. 10's acting as resistance. I'm good. Volume is normal. Okay, everybody pay attention to the volume here as I'm doing this. Volume's normal. Volume's normal. We're going along here. This is all good. Crap. Okay, at this point, Bruce, if I'm in this trade, if I'm in a put position on Baidu, and I see this right here, my finger's on the trigger. Right? This would be one case where I am not likely to wait for the full 5-minute candlestick. If I see this, my finger's on the trigger. Why? What about what's going on right now? If I'm in this trade minute to minute, what is jumping out at me right this second is this. I got massive volume on this sell-off. And normally that would make you say, oh, that's a good thing. I'm going to make a lot of money on this. As soon as you feel that, as soon as that grabs your guts and you get that tension in your chest and that thrill of adrenaline and excitement, get out of the trade. I mean, I'm serious. At this point, I am finger on the trigger. I'm looking for any sign of bullishness. Didn't get it. Okay, we're okay. Well, hang on a minute. Hold on a second. Right? At this point, I'm probably out of the trade, if not tightening my stops down to the top of this candlestick right here. And I'm out. Okay? I'm not going to wait around to see how it works out because I've done that too much. I have paid, I'm not even going to tell you how much I have to add it up, and I would guess that it's well into the 6 figures of money that I've lost sitting around on trades celebrating, admiring my own work when I should have been paying attention to the freaking pattern. So our preferred course of action there, Bruce, is be ready to get out if you're in a bearish trade, and be ready to flip it over to a potential bullish trade if you get a true blow-off reversal pattern. Brian, I remember we had a price line trade going in one of the 5 days, and we were killing it on puts. I mean, it was just stupid how much money we were making on puts. On price line, we killed it, we crushed it, and then it was paper trade, but we were killing it. We're getting ready to go to lunch, and we got a variation of this blow-off bottom pattern, and it was actually Marquet that called it because we had a big volume bearish candlestick, and she said, don't leave for lunch yet, better watch this candlestick. Sure enough, the next candlestick started going up, and the combined candlesticks together with the volume would have created a blow-off bottom. We exited our put options, rolled over, bought call options, and made crazy stupid profit on the way back up. Okay, so our preferred course of action when we see these kinds of patterns is to really protect yourself on the trade that you're in. Get super aggressive. Goal line defense. This is where we bring J.J. Watt up, and we're like, all right, that guy runs through here. You crack it.